I think one of the reasons why we love business like Republic is we believe that there's a future where every company, particularly on the consumer side, should raise some portion of their financing from the crowd or their community or their stakeholders. Because what you do when you turn customers into stakeholders is you get a much different relationship with them.
Welcome to Profit to the People, the official podcast of Republic, where we believe you have the power to invest in the future you believe in. I'm your host, Lisa Carmen Wang, head of brand at Republic, and I'll be taking you behind the scenes to meet the team, founders, and investors in our community who share their insights on the future of investing and how they're bringing profit back to the people. To learn how you can invest, head over to republic.co and follow us on all socials at Join Republic and at Lisa Carmen Wang. Today, I'm here with Michael Sidgmore. He's a partner at Broadhaven Ventures, where he invests in early-stage FinTech companies globally. He's also the founder of Alt Goes Mainstream and the co-founder of Community Times Capital podcast with Alexis Ohanian, where he talks about the intersection of community, culture, and capital. Today, we'll be talking about investing in the future of democratized finance. The internet has made investing more social than ever, and people are demanding access to all different types of investments today. And when we give people the power to invest with their wallet, we are also giving them the power to vote on the future and build our culture. Michael is a longtime believer in democratizing access to financial services, and so I'm excited to chat with him today about what it means to invest in this space. So, Michael, welcome to Profit to the People.
Lisa, thanks for having me.
As a longtime believer of democratizing access to financial services, tell us a little bit about your background and how you got interested in investing in FinTech.
Yeah, so I've been in FinTech my entire career and have seen the early evolutions of crowdfunding or crowd capital raising platforms from kind of the 2012, 2013 era. I'll go back even a little further because I saw the power of crowdfunding actually at the intersection of one of my other passions, soccer, and crowdfunding, when I saw that there was this professional soccer player, a guy named Jay Demerit. He had this improbable story. Really what I wanted to do, I went to the UK to try to play soccer before college, was much less successful than Jay, who ended up playing in the Premiership, one of the best leagues in the world, and then played for the U.S. national team. But I saw this article in the Washington Post in 2010 that his friends were trying to crowdfund a movie about him because it was such an improbable story. This guy from a relatively obscure university went to try to play in the UK, didn't have any connections, made it, and became like a soccer star effectively. And saw this article in the Washington Post about them trying to figure out how to raise money for it. So I actually just emailed the guys and was like, hey, have you heard of this thing called Kickstarter? You should finance this because people are so passionate about the game of football or soccer. What if you just raise some money for it on Kickstarter, and you'll probably get a ton of people who would love to see this movie actually be produced, because they had to get the right, they had to be able to pay for the rights to MLS and English Premier League footage as well as World Cup footage. So it was like $250,000. So they did it, and at the time, it was the largest project ever funded on Kickstarter. And that was really what kind of showed me the power of the people and community actually investing into things or backing things that they loved. So that really stuck with me. Like I said, I tried to go play soccer in the UK, much less successfully. Tried to play semi-professionally, ended up getting injured, needed a few hip surgeries, and went to school in London. So I did my undergrad in London. And from there, didn't study finance, but ran the world's largest student conference on alternative investments, on hedge funds and private equity. So kind of got a trial by fire education into the world of alternative investing. And then started my career at Goldman in London, investing into FinTech companies. So I was on this team called the Principal Strategic Investments team, investing into really capital markets infrastructure. So that was well before people in the retail community were investing into alternative assets, but was certainly seeing the rise of these crowd capital raising platforms like Lending Club or Zopa in the UK, and was spending a lot of time thinking about how marketplace finance was going to disrupt traditional financial services, where you're cutting out the middleman and truly peer-to-peer financial services. at least the idea of it was really appealing to me, and knew that people are social beings, and consumer social, Facebook, Twitter, LinkedIn, were starting to take hold. So I was thinking about the intersection of all those things while I was at Goldman. Actually spent a lot of time thinking about the idea of social plus finance, which Goldman has since talked a lot about, and got a call from a crowdfunding platform called Mosaic out in California. They were crowdfunding solar projects effectively, so enabling people to invest in community solar projects, mainly on the commercial side, but crowdfund solar on the rooftop of a community center in Oakland, for example. And you can invest $25 minimum, you get a fixed income-like return. So when I saw that, I was like, okay, this sounds fascinating. People are passionate about climate change and clean energy. People want to invest in the things they care about, and they want to invest in their community. And a platform like Mosaic's enabling that to happen. So ended up joining as the first sales hire, was number 16 there. And we tried to grow that platform. It's since become actually more of a residential home solar loan originator. Has raised about $300 million of equity from Warburg Pincus, and has done over $7 billion of solar loan originations. But that really kind of showed me the power of these online or crowd capital raising platforms. From there, went to iCapital Network, was pre-product, employee number 8 there, enabling people to have democratized access to private equity funds and hedge funds at lower minimums. Now, there are certain regulations which mean not everybody can invest in a private equity fund, so it's still the domain of the high net worth investor for the most part. But instead of the 1% having access, maybe it's the 5% having access at $100,000 minimums to a fund that really is generally only taking institutional investors at $20, $30 million minimum check sizes. So we grew iCapital into what today is about $86 billion of assets on its platform, is a unicorn, just raised $400 million in a round led by Temasek at $4 billion valuation. So I'd been early at these two crowd capital raising or online investment platforms. And when my partner and I decided to form Broadhaven Ventures, which is an early stage fintech VC that invests into fintech companies on both consumer and enterprise side globally, the kind of idea of democratizing access to financial services was a really big part of how we wanted to think about investing into fintech, enabling people to access in emerging markets, even just things as simple as access to consumer credit, access to SMB credit, so like an SMB lender, like Credit Justo, which we were one of the first investors in Mexico. Largest SMB lender, fintech SMB lender in Mexico. They just bought a bank. Digital banks globally. We've invested in MoneyLion here, which is a $3 billion business that just went public. Things like that, where you're just democratizing access to financial services. And then, of course, companies like Republic, which we were investors in the Series A. I invested personally in the seed. And just believe that people should have access to all sorts of financial services. And it's these online investment platforms that are providing a better user experience, reducing costs, creating more transparency in the market to enable them to do that. So it's a big part of what we focus on, and one thing we're really passionate about.
Yeah, that's an incredible backstory. What are some of the challenges that you see that are still in the way of just really full mainstream adoption?
It's a good question. I think there's a few things. So one is, I think education is a really big thing. And if we focus particularly on the alternative investment space, which I know Republic focuses on, we focused on at iCapital, investor education is so important. It's important for people to understand, A, what investing is and what it means, B, how and when they should invest. So investing into things directly sometimes can be great, but sometimes we're our own worst enemy. There are times when it would make more sense for people to invest into funds, for example, with professionals and fiduciaries who have a responsibility, and that's their full-time job. They're going to be experts in an ecosystem or an industry where they're going to know how to invest better than I myself ever will. So I think education becomes so important. I know platforms like Republic, iCapital certainly really focused on education of the consumer, or in iCapital's case, mainly focusing on the intermediary, so the wealth manager, educating them on why alternative investments make sense in an investor's portfolio. So I think education's a really important piece of it. And then I think distribution ends up being a really important piece of this as well. So can you actually distribute products that investors should be investing into? And within distribution, I think, comes the classic marketplace challenge of quality control, right? If Amazon had really poor quality products, nobody would ever trust Amazon and people would never buy products on Amazon. So it's incumbent on the platform like Republic to really have high quality products on the platform, high standards in terms of the quality of the founder or company that they've invested in or asset, if it's a crypto investment or a fund or whatever type of asset that you have on your platform, and then really high quality diligence standards that makes the investors who are participating on the Republic's platform trust that you're providing them with high quality opportunities. So I think distribution ends up being challenged because it's hard to do really well, and a lot of platforms struggle to figure that out. The ones that do often end up winning. But then you have to also have high quality assets on the platform. And that's always always that inherent tension of, are there ever enough high quality assets to have? And matching that with investor demand. But I think those two things, when they get figured out, and again, there are great platforms doing this, then I think you end up in a place where it's good for both the investor community and the supply side. So the either the companies or the issuers, funds, companies, et cetera, who are seeking capital for their projects. Because then the powerful thing about, I think, investment platforms, different than kind of more traditional finance, is you can engage the community. So I think one of the reasons why we love business like Republic is we believe that there's a future where every company, particularly on the consumer side, should raise some portion of their financing from the crowd or their community or their stakeholders. Because what you do when you turn customers into stakeholders is you get a much different relationship with them. They end up wanting to purchase more if it's a product. They end up becoming fans of that product or company more and in a different and engaged way. So it creates a very different relationship. And I think we live in a world where people want to own things. And they know that if you own things, you're building equity. That's different than just being a consumer of something and being effectively, to some extent, used by whoever is the platform provider.
Yeah. And as someone who built a community specifically for female entrepreneurs, I know the power of having that level of transparency and communication, just information sharing. So, I mean, you've been an investor in this space very, very early on, when people were still doubtful of the quality of deals. And how have you seen that change in terms of the types of founders who are raising and the communities that are forming around it?
It's a great question. I think there are still many people who ask that question, particularly VCs, when they're evaluating many of these platforms. Are there enough great companies or great funds or great issuers actually using these platforms to raise capital? And I think we've finally crossed that chasm. So, and I'll tell you why. So one is, I think we now live in a world where, like I said, community is such an important part of building a business now. And engaging your community ends up being really important. So it's not just companies that come to these platforms as a last resort for raising capital, but it's really high quality companies. Republic's had some companies that have been backed by a top venture capital fund like Andreessen Horowitz, either raise money at the same time that Andreessen's led around, or Andreessen has actually marked up those investors from the crowd. So they're investing before a top tier venture fund is investing into one of these companies. And I think that shows that there are high quality companies that can raise capital from these platforms. And it's a way for them to engage their community in ways they may not have been able to do before. So I think that's one piece of it. I also think that there's the regulatory environment has unlocked the ability for more participation. So regulation crowdfunding, Reg CF, has enabled individuals, whether they have $10, $100, $1 million, to be able to invest into companies or assets they believe in. And as a result of that, I think you have an environment where it's become more acceptable for companies to raise capital from platforms or ultimately the end consumers of these platforms, but they know they're going to actually get benefit from it, not just the negative selection bias. Now, it's still incumbent on the platforms, as we talked before, about them picking really high quality projects or companies so that people continue to trust the platform and come back. But I think we've crossed that chasm really in the last year or two. It feels like high quality companies and funds. Same with iCapital. We had really high quality, top tier venture capital, private equity, hedge funds who felt the need to raise capital from the broader wealth community. I think that's another piece of this that we often, to some extent, overlook, but there's $10 trillion of wealth in the US alone that's tied up in the financial advisor or wealth management community. A large portion of that is not invested into alternative assets. So the average independent wealth manager, RIA, registered investment advisor, 1 to 2% allocation to alternatives. You compare that to a top university endowment, Yale or Harvard, where they are outperforming markets, often because they're invested in top-tier venture funds or private equity funds like the Sequoias or Benchmarks of the world. They have 25, 30+% allocation to alternatives. So even the high net worth community is woefully underallocated to an asset class or a set of investment opportunities that could be returning significantly more capital for them, provided they're in the right companies or funds. But in a low interest rate environment, you need to chase yield. And I think that's another piece of this too. We've seen this rise of these alternative investment platforms providing access to high quality opportunities because investors know they need to access and search for yield. These platforms provide that. And then these funds or companies realize that the retail investment channel or the retail investor channel is such a massive opportunity for them that has just been untapped effectively. Just one final anecdote on this. A firm like Blackstone, one of the largest global alternative asset managers in the world, I think 220 plus billion of assets under management, they believe that in the next few years, 50% of their LP capital, so their investor capital that they raise money for, is going to come from the retail channel.
I mean, when we saw essentially the retail revolution, that just happened recently with GameStop, and that kind of, I think, triggered the conversation of the power of the people. What was your take on it when all of that happened?
It's a great question. So I also have one foot in the world of traditional finance, and I have one foot in believing that there should be democratized access for the individual investor to any sort of investment. Again, in a high quality, educated manner where they're not just investing in anything, because then that becomes more like gambling, but they have access to investments, funds, or companies that any institutional investor would have access to. So my view on something like the GameStop or AMC kind of saga is, it's great that people are now investing. And platforms like Robinhood, I believe 50% of all of Robinhood's accounts are first-time investors. So people have never had brokerage accounts before, so they're now investing in the stock market. That net is a good thing. Now, I think that's where education becomes really important. Investing and gambling are two very different things. And on one hand, it's great that people have agency over what they invest into, how they invest, and if they choose to invest their money into things that they believe in, that's great. On the other hand, I think that there's still a lot of work to be done around the idea of educating the investor. And the reason why is because sometimes individuals are not going to be the best at deciding what to invest into. And the argument may be that over time, they may be better putting that money into a passive index fund than they would be investing into stocks on Robinhood by themselves and having the agency. Because if they're not professionals or they're not doing it on a daily basis, they may not be as good and outperform relative to a passive investment vehicle that over time might outperform the market. So that's where I struggle with it a little bit, to be honest. But at the same time, I don't think we can turn a blind eye to what the broader undercurrent of the movement is, which is that people want to own things and they want agency. And the theme of all of this, I think, is that investing has become embedded in culture. It's now cool to invest. It's cool to learn about investing. It's cool to have things like NFTs. So like have your lazy lion profile picture or have your CryptoPunk profile picture on social media. And these social media platforms become a distribution channel to learn about new things, which is great. And that's totally democratized access. The only thing you need is time. And then you can learn. And there's Reddit groups, there's Discord groups, there's platforms like Twitter, which are enabling people to learn. And that access to information is a really powerful thing. So there may be cases where people are actually learning about investing and actually become good investors. So that's why I don't think you can, A, turn a blind eye to it. B, I don't think you can stop it either. I do think that education becomes a really important part of this. And access to high quality opportunities become a really important part of this. So where I get a little concerned is about the gamification of it. I do think Robinhood has gamified investing. And again, I don't think it's something we're going to ever be able to get kind of put back in the bottle. But it's something we have to think about as we do think about things like investor protection and making sure that investors aren't going to the casino and just losing all their money.
Yeah. I think what you've touched on is just this mentality that people have of following the hype, especially when it comes to investing. And if they're inexperienced investors, it's like, oh, well, everyone's doing it and I should pour money in, which is actually the opposite of what a good investor should do, because the good investor actually has seen cycles and is able to be patient and form their own thesis around why it is that this is a good long-term investment.
Which is why I think, platforms that are building community and enabling people to tap into the wisdom and knowledge of the community can be really helpful and powerful. I think you're now seeing that, particularly within the crypto community, in places like Discord and Reddit, where a lot of people are talking about all these different projects and saying why they think they're good. And people who have the time and ability to go and learn about that, they will become smarter, they will educate themselves. And then it's up to them what they do with their money. Again, I do think there's actually some things that the US can learn from places like the UK, where anybody was able to invest into crowdfunding platforms or projects or investments on crowdfunding platforms, but they can only do it to a certain percentage of their net worth. And I think that's the way it should be. If you have $100,000 net worth, and then therefore you can only invest $5,000 into these projects that you really care about, well, if you'd invested in Revolut or Monzo, you would have had millions of dollars based on where these companies are currently valued at. So even if somebody can only invest $1,000 or $5,000, that would still be great for them to be able to do if they really believed in that project or company, or they knew the founders and believed in it. So I think there's kind of some things that both the regulators can learn, but there's also some things that I think we as just people in the industry, as a VC, I think about this a lot. I think the platform operators, so like what you all are doing at Republic, we have a responsibility to think about how are we educating consumers, how are we putting high quality assets on the platform, and then making sure that people understand the risks. But at the end of the day, I mean, it's their capital and they can choose what they want to do with it and how to learn. But there may be opportunities where it may make sense for them to do it because they might know things even more than kind of the average consumer. And I think that's where the world of alts, which I talk a lot about on Alt goes mainstream. So things like that combine culture or passion with investing. So collectibles, sports cards, classic cars, wine. There may be people who are super engaged and passionate and understand classic cars or sports cards and have been a huge LeBron James fan. They may know more about those specific assets than the average everyday consumer or even professional in finance. They may be better placed to make better decisions than some of those people. So there's a balance between both of these things of letting people invest into what they're passionate about and making sure they understand the risks of what it means to invest.
So there's two themes I want to touch on there. One is around the passion and the other around the risk. So just going back to something you said earlier about how some of a lot of these institutions and just people are not investing a significant portion of their assets into alternative investments. And I think part of it is still this belief that it's very risky. And I think especially for those who have never invested before, they're thinking about it, there's always this fear of losing, right? The psychology of fear of loss is greater than the opportunity for gain. How do you think we can change that narrative where it's really about investing in these opportunities and shaping culture, and it's actually potentially more almost more risky not to get involved?
It's a great question, and one that I think about often because I think passion does drive and so much of what people want to do or what they care about. And if they are super passionate about music or collectibles or art, yeah, they should absolutely go down that rabbit hole. And again, maybe they will know more than the average consumer and would be well placed to invest into those types of assets. Now, I think it's also important to step back though and say, okay, there's all these different assets in the alternative space. Some are productive assets where companies that create cash flows and you can value those businesses, and therefore you should be able to create an output of, oh, this company should be worth X because it produces this type of cash flow. productive assets are very different from speculative assets, which may be things like NFTs or certain crypto assets or art. Art is a speculative asset as well. It's also a very opaque market of how do you know why this piece of art is priced a certain way. And yes, there's ways to value that, all of that kind of thing. But there's a difference between productive assets and speculative assets. Just because there's a different way to value those types of assets doesn't mean you shouldn't own some speculative assets in your portfolio if you're willing and able to lose what you invest, right? There's high net worth investors have long invested in art. They've long invested into collectibles. They've long invested into all sorts of speculative assets. And then they've also invested into risky but potentially high return productive assets. Investing into venture capital is certainly risky, but you're creating companies that at some point hopefully will have cash flows and hopefully will become productive assets that you can value. So I think it's just a matter of constructing a portfolio in a way that makes sense for everyone as an individual. Now, certain people will structure their portfolio differently based on their lifestyle, based on their risk tolerance. But I think it's important in the world we live in today where everybody should have at least the ability, if they want to invest some portion of their net worth into things that they believe have the chance to return money and have value, which is why on Altco's mainstream blog, I did a whole blog post about the 60-40 portfolio no longer. So the idea that 60% equities, 40% fixed income or bonds, that was the traditional portfolio, relatively low risk, relatively stable, and you know generally you'll do fine, you'll have something for retirement. But I think between looking at where rates are, interest rates are historically low, so therefore you have to go into higher yielding but higher risk assets. Two, you have younger people who care about investing in things that they really believe in or are passionate about. That's where the culture piece comes in. I think you can't kind of turn a blind eye to the fact that people want to invest in these things. So then I think it's up to all of us to create platforms and opportunities for people to invest into assets that they believe in, but that also have a chance to generate returns.
So for a new investor, would you recommend that they start with doing research on one particular asset or kind of going broad and generalized and figuring out what it is that they are most passionate about?
It's a good question. I think, look, there will be some people who are particularly passionate about certain things. And if they are, they should absolutely go down the rabbit hole of maybe it's crypto, maybe it's NFTs, maybe it's sports cards, maybe it's collectibles, all things that people may be super passionate about and now have the ability to invest into. So I'd say that's one way to do it. But there are other people who may take a more holistic approach and say, okay, I have a portfolio. I'm going to allocate some of that to the public markets. It's liquid, so therefore less risky to some extent than illiquid assets that you can't effectively sell if you needed to for a liquidity crisis. And think about it as a kind of an overall holistic portfolio approach of, okay, how do I think about my public markets exposure? How do I think about my private markets exposure? And how do I want to construct a portfolio that is right for me? And I think it's not just the individual who has to think about this, but I think it's the intermediary or the wealth manager. So yes, not everybody will have a wealth manager, but people at certain net worth levels will. And even many of those people don't have the access to alternative assets or historically haven't had the access to alternative assets that they probably should. And I think it's really about educating the wealth manager or advisor, because again, there's $10 trillion of assets in the wealth space in the US. That's a massive opportunity of capital that can roll into the alt space, whether it's investing directly into companies, whether it's investing into funds. And I think that's where you can start to think about things in a holistic way of providing a way for people to have some exposure to things that probably should be in their portfolio, but also things they care about too. And that's where I think both the individual as well as the intermediary will want to learn about those things. Because I think the other piece of this too, we saw this happen a lot at iCapital, but the next generation investor is going to have a very different portfolio than the current generation and the generation before that. And if wealth managers want to retain that next generation client, they can't turn a blind eye to what this next generation investor is interested in. And that's very different from what the last generation was interested in.
Yeah, definitely. And when you think about bringing in some of these new next generation of investors, what have you done or what have you seen that has been effective in intentionally bringing in minority investors, female investors?
It's a great question, and one that I think people are thankfully very aware of now. I think that comes to, honestly, to platforms like what Republic's done with Venture Partner Initiative, creating a way for more people to provide access to great founders, entrepreneurs from different places that maybe would have been overlooked in the past, but may actually be great opportunities because they're investing in underserved communities that just haven't had the right solutions for them, and they will know it better than anyone else. So providing access to the entrepreneurs to attract capital from maybe people who understand that problem innately, I think is really powerful. So I think it's actually democratizing access to financial services is not just about for the investor, but it's also for the supply side and for the issuer. And I think that's where, honestly, platforms come into play, because the traditional financial services firms aren't generally equipped to create that kind of interaction or that marketplace where both supply side and demand side can meet and find each other. So that's why I think these platforms for discovery are actually a very, very important tool for that to happen.
Yeah. And I mean, from my experience, and we see the stats, right now it's still women founders receive less than 2% of all venture capital, and women of color less than 0.2%. And I think a big part of that is because still over 90% of venture investors are men. And there's, of course, so many stories of women initially coming in, catering towards the female market, or, underserved founders catering towards underserved market, and then investors simply thinking that those markets were not viable.
Well, yeah, I mean, oftentimes you kind of use the reference points of what you understand or know. Yeah. And usually a founder is solving a problem that they innately understand or know or experience themselves. And who better to raise capital from other people who can relate or sympathize or empathize with that problem. And that's where I think, whether it's from institutional investors like venture capitalists, who I think, again, are more aware of this and are trying to fix this in a number of ways. That's one way. But two is platforms, because the power of the people or the community can end up being a great way for these entrepreneurs to, A, jumpstart the development of their product, jumpstart the development of their community, or jumpstart the development of their commercialization. And that can be very powerful proof points for then institutional investors to say, oh, you know what, maybe there is something here. Because when there are metrics around a business, it's much easier for people to look at a business and say, okay, there's something here, whether or not I really understand this space as well as I should.
Yeah. And switching gears a little bit to a space that I know you're also deeply involved in is the crypto space, especially as it relates to bringing more transparency, bringing more access, disintermediating a lot of different opportunities. Tell us a bit about your involvement in the space and what you've seen in terms of giving people more access to these financial services.
Yeah, so I've been kind of in and around the crypto space for a while. I think ended up buying my first Bitcoin back in 2014 or so, and was, to be honest with you, somewhat skeptical. I came from a more traditional financial services background at Goldman Sachs, and I was trying to wrap my head around how the world of crypto and decentralized finance would interact with the world of traditional financial services, where there's centralized institutions who kind of control how things work. Now, in theory, totally makes sense. At the time, I was a little bit skeptical of how things would work. Now, I do think that, and did think at the time, that blockchain technology would be incredibly powerful as a way to on-ramp people from traditional world of financial services to the world of decentralized finance. And even the traditional world of financial services could leverage blockchain technology, whether it's fund administration, whether it's real estate investing, tokenizing traditional assets. All those use cases make a ton of sense. I think what's emerged as we've spent more and more time in the crypto space, and we've made a number of investments in the crypto space, both in companies and funds. Companies like Bitso in Latin America, 3 million customers, they're making crypto useful for people in Latin America who may be subject to high rates for remittance, inflation, high inflation, and very kind of unstable governments, where if you can hold your money outside of kind of the central ecosystem where you normally have to put your money in banks, et cetera, that can be that can be very tough if you're in a region like Latin America. So something what Bitso is doing, enabling people to invest, but also to kind of operate outside traditional financial services ecosystem, I think can be, if done and used in the right way, very positive and powerful thing. So I think that over time we've seen that the crypto space has really unlocked access to investing in a number of ways. And also creating a more decentralized world. I think eventually we will see certain industries get disrupted by decentralization. Not every industry, but I think you can remove the middleman and platform operator. So a lot of things that are creator-based, whether they're the Ubers of the world, whether they're the creator platforms for musicians, artists, individuals who want to connect directly with their fans. I think there's a lot that crypto can do to enable that to happen. I think the other thing that's been fascinating about the crypto space is that it was really one of the first assets, or asset classes, I should say, where the individual had the chance to make money at the same time or before institutions. So if you as an individual ended up believing in Bitcoin in 2010, or believing in Ethereum at the pre-sale, or right when it went on an exchange and anybody could buy it, you would have made more money than an institution. Now, and I understand that it takes time for institutions to want to invest into a relatively new asset class, get comfortable with the risk reward, and there's a space that's developing around crypto. But this was really the first asset class, unlike equities, unlike fixed income, unlike private equity, even venture capital, where it was really the domain of a select few. Now the individual could actually make money before. So I think that's been really powerful. The other thing that I think crypto has done to really unlock the retailization of financial services is fractionalization. So now we think of fractionalization as something that kind of can cross-cut all financial services. Robinhood, fractionalizing public equities, right? You can invest $5 into Apple. You couldn't do that before. So you had to invest into an ETF, which would kind of do that for you in a sense, but you couldn't invest into single stocks. Robinhood and all these other kind of retail brokerage platforms enabling you to do that. Republic, doing that with private markets. You can invest $10 into a startup. Before that, you couldn't. You'd have to invest hundreds of thousands of dollars into a startup, and you had to be a high net worth individual to do so. So I think fractionalization in crypto, right? Because you can buy 1/10 of a Bitcoin or 100th of a Bitcoin. That's really powerful because what it means is that people don't have to have a huge amount of capital to invest into these tokens. And I think that's unlocked the imagination of people across all different asset classes. You now see that happen in collectibles as well. Companies like Rally Road are enabling people to invest $50 into a multi-million-dollar LeBron James card or a multi-$100,000 CryptoPunk. You weren't able to do that before. So there obviously had to be the underlying infrastructure from companies like Drive Wealth, which are enabling that to happen. But I think that's a really powerful and quite honestly underrated aspect of crypto that's really created this whole movement around the retailization of financial services for the everyday individual.
And I think especially in crypto, there's a really important community aspect of it. Tell me about what you've seen in communities or what's been effective in those.
So if you think about Bitcoin, it's probably the first financial asset that has become a religion almost, right? I mean, there was a great quote by someone who worked at the Coin Center who said that Bitcoin's the first financial asset on Twitter, said this on Twitter, Bitcoin's the first financial asset that has been memed into existence, right? So if you think about it, community has been such a powerful aspect of why people care about these assets. And again, founded or unfounded, Dogecoin has built a tremendous community around it. You could argue that that asset is a meme coin. It has no true fundamental value, and I would argue that that's probably the case. But what you can't ignore, and even me as somebody from the traditional financial services, can't ignore the fact that there's a whole community of engaged supporters around this that are willing to support this asset, that are willing to champion it, even go as far as, if you believe the religion analogy, proselytize it. And that is something that cannot be ignored. And I think that there's some undercurrent of people wanting to, one, own things, and two, they felt left out of the traditional financial services system. So therefore, crypto provides a way for anybody to have, with Bitcoin as an example, monetary freedom, and with all these other crypto assets, a way for people to be a part of the system that they've never been a part of before. And again, we can talk about should they be investing in all sorts of assets. There will be many of these speculative assets that don't work and don't work very well. There will be some that do because they're going to have staying power and they're going to have real utility. Ethereum, Solana, those seem to have some level of utility, and we'll find out. I mean, Alexis and I talked about this on the Community Times Capital podcast recently about, and Alexis said this, where maybe people are late to crypto, but we're still long-term early. If you think about it, we are still so early in the dawn of the internet era. 30 years, less than 30 years, the internet's been in existence. So, I mean, Facebook, Instagram, Twitter, those weren't created even Internet 1.0, when the Amazons had been created, when the Googles had been created, when the AOLs, the UUNets, et cetera. That was Internet 1.0. We've only kind of gone 30 years. So we still have such a long way to go. And you look at companies now we can see companies that become $1 trillion plus companies. You can see a path to that. I think we're going to see the same happen in crypto. There will be protocols and there will be tokens that have massive amounts of value. It's hard to tell which ones will. So there's still going to be a lot of speculation. There's going to be people investing into all sorts of tokens, assets as they kind of go through this gold rush. And that's why I think the underlying platforms are going to be really valuable, which is why we like the infrastructure behind it, whether it's investing internationally into kind of the Coinbase equivalents of the world, like a Bitso. It's the on-ramp to the crypto economy for Latin Americans. Or kind of similar plays around the world, or the infrastructure that's enabling people to invest, like a Republic. There's other platforms out there that are great, like CoinList, that are enabling people to invest and interact with crypto. And then you have the consumerization of it with wallets. That's going to be the way that people invest into NFTs, through wallets like MetaMask or Rainbow. And I think all of that infrastructure is going to get built, and then there's going to be some value in it. But people are going to invest in things that they maybe shouldn't, maybe won't have value. So that's where I think education is going to be an important part of it, where hopefully the community will be used for good, which is helping to educate people. But that's, I think, the piece of crypto that you really can't ignore is very few traditional financial services businesses have been able to create such an engaged community of fans and followers who now not only are customers, but they're owners and stakeholders.
And I mean, I think every time that there's a shift in power, obviously those who are in power are resistant to the change. And with the internet, the democratization, it's like, as you said, we can't ignore it. But with crypto, we know that there's a lot of regulations that are still imposed upon the growing trend of it. What do you think needs to happen, or how are we going to shift that narrative to the point where we can actually get mainstream adoption?
So I think there's almost two different questions embedded in there. One is regulation and investor protection, which is happening. And I think as we've seen from the past few weeks with what Coinbase is kind of having to go through with the SEC around their lending product, regulators are certainly shining a spotlight on crypto because it has become too big to ignore. So that's where I think in some ways, that crypto has staying power because it's become so big that the regulators can't ignore it. They need to figure out how to engage with and work with it, which net is a good thing. Now, I think the investor protection piece is also going to become really important here, is how do you protect investors from being their own worst enemy and investing in things that they are just investing into because others have invested into it. So I think that's one piece of it. The other piece of it is, how do we mainstream crypto? That, I think, is a totally different thing. I think that comes down to two big things. One is user experience. Can you create an amazing user experience that makes people feel very welcome into the crypto economy? What does that mean in practice? That means creating a way for them to feel like they are transacting or doing things in the crypto world without feeling like they're even in the crypto world. So that's creating platforms. SoRare is a great example of this. They've created a global fantasy soccer game. There's a crypto component to it. It's built on the Ethereum blockchain because they mint digital NFTs or collectibles of players because they partner with leagues and teams to mint those collectibles of one of the world's biggest superstars, Leo Messi or Kylian Mbappe. And people are able to purchase these cards in either crypto or fiat and build a fantasy soccer team. Many people have played fantasy sports. There's, I think, about 3 billion people who love the game of football globally. So if many of these people end up on a platform like SoRare, which actually just today announced a $680 million round, largest Series B round ever in Europe, I think platforms like that are going to help mainstream crypto because people are going to be transacting or using crypto, or sorry, they may be using fiat, but with crypto rails as the underlying. And I think when we get to that point, and the user experience is really good, then I think we're going to get to a point where people may not know the difference. And that's where you want to get to when it comes to mainstreaming it. I think there's going to be a whole kind of set of infrastructure around this too. I think the wallets are really important as well. If people want to engage with NFTs, they're going to need wallets. And that's how they're going to engage with the crypto world. So there needs to be kind of better process. And I know people are working on this, but it's still hard to buy a NFT on OpenSea. And the reason is not any of their fault. They're building their platform, and they're probably moving as fast as they can because the demand for people wanting to do this and transact on these platforms is massive relative to the size of their teams and how old these companies are. But it's still hard for people to then, they have to download their MetaMask wallet. They have to transfer Ethereum from their Coinbase account or their Gemini account or wherever they have Ethereum, if they have Ethereum, into their MetaMask wallet, and then they have to transfer it into wrapped Ethereum so that they can then buy an NFT or bid on an NFT. That's a complicated process. So that's where I think it's going to take a little bit of time and it's going to take education. But gosh, are we so early? I mean, this feels like the beginning of the internet all over again, which is what's so exciting about this, is that everything's now kind of just being built. The tracks are just being laid to create the railroad that people can then use to kind of be part of the crypto economy. So it's so exciting. It's one of those things you just can't ignore it.
Yeah. Well, I mean, just listening to you makes me even more excited. But I'd love for you to just share some of your most important lessons that you've learned as an investor.
Yeah, it's a great question. So I think probably the number one lesson I've learned is, especially at early stages, you're backing people. So you are backing individuals who have to be passionate about what they're doing. They have to believe that they are doing something that will make a difference in this world. And when you uncover those things, plus their ability to actually execute on this, you're investing in people who want to create a different world. So I think that's number one. Number two is, I think that when you think about early stage investing, you also have to think about yourself. What do you think the world is going to look like in 5 to 10 years? That requires a lot of imagination, and not just thinking about what it looks like today, but what will this world look like in 10 years? Is this a world that you want to see happen too? So I think when you think about those two things, that's really what, in many respects, early stage investing kind of comes down to. Yes, there's a ton of other things. You have to evaluate things like the market and the competitors, and is this a viable business? But I think all of that kind of comes with the first two points that I mentioned, because at the end of the day, it's great founders that create great businesses. And that's that's what I've always found and ended up learning, is that you're really just backing incredible people. And when you do that, more often than not always, but good things tend to happen.
Yeah. Well, as we say at Republic, invest in the future you believe in. So that means investing in the types of companies, the types of leaders, and the types of change that you want to see.
Yeah.
So final question for you, Michael. What does bringing profit to the people mean to you?
Honestly, it means exactly what you said, which is enabling people to invest into a future that they believe in. That goes back to community. People will, if they invest in things they believe in, they will want to see those projects or companies succeed and prosper. And there's this virtuous cycle that comes from that, right? So when people invest into things that they believe in, they're more likely to purchase from those companies. They're more likely to be engaged. They are more likely to want to champion that and engage other consumers or their friends. And that creates this virtuous cycle where these businesses get built by community. And I think we've entered a world, and crypto is a great example of this, bottom-up community building. So building from the bottom up, where these, whether they're decentralized world or centralized companies, end up engaging their consumers in a way that makes them stakeholders. You're changing the way that business is done effectively, in a sense. And I think that's why companies can't ignore community. Every company should be thinking about how they engage their community and not just engage them in a way where they make them feel better as consumers, but engage them as stakeholders. And same with the decentralized world. I think crypto's done an incredible job, and I think the traditional world, particularly financial services, can learn a lot from how crypto's created community and leverage social media and platforms and distribution of that to create community. Totally free in many respects. They've done a great job of getting the word out on crypto for a relatively small portion of the world. I think there's 100+ million or so crypto wallets in the world. We have 7 billion people in the world. There's still a long way to go. But they've done an incredible job of building a whole community and a movement around this. And I think that every company, centralized or decentralized, they think about community, think about how that intersects with the world of financial services and how investing will intersect with culture. If they do that, I think that's how you get profit to the people.
Well, thank you so much, Michael, for all of your insights and for your continued work in bringing profit to the people.
That's the goal. Thanks for having me on.
This podcast is provided for educational purposes only by Republic and Republic.co. Nothing discussed should be construed as legal, tax, accounting, or investment advice. The views of the presenters may not be the views of Republic and its affiliates. Always consult with trusted professional advisors before making investments. Private investments are inherently illiquid and may result in a total loss. All rights reserved.